We are going live. We are live. We are about to enter, or we're entering, or we have entered the worst real estate market since the Great Financial Crisis, at least here in Canada. So, why do I say that? People aren't taking me seriously about it. I'm always a bull on the market. I think real estate's a great investment tool. I'm an investor myself. And yeah, we are headed towards a very different market than what people are used to over the last little bit. And I'm going to back that up here today with numbers so you can understand exactly what's going on out there. And this is a live stream. So after I chew my mint, please enter any of your questions. If you have any questions about the market or anything like that, enter them into the chat and I will get to them. But let's talk about this marketplace and exactly where we're at. Why do I say it's the worst real estate market since the Great Financial Crisis? Well, at this point in time, the reason that is because of the active listings that are on the marketplace. We currently, as of about 20 minutes ago, doing my research for this live stream, have 6,110 active listings on the marketplace. Now, if you follow the channel, 6,000 listings in the Fraser Valley, it's actually a very healthy market. There's lots to pick from. You're still going to get your home sold. It's actually a really, really healthy place to be. But it's a very healthy place to be for June. And we are starting to see listings absolutely flood to the market. So let me show you what I mean by that. I'm not just going to just blab about it. I'm going to show you actual numbers here so you can see that this indeed is the case. This is what's going on. Take a look at this here real quick. January 2025, 11 of 22 working days so far this year, we have had 1,730 new listings come to the market. Last year at this time, when the market was heating up, that number was 1,142. So we're like 600 listings more than this same time last year. And at the same time as that, when we rolled over into the new year, we were already like 1,000 listings more. So we're going, let's say, somewhere around, I don't know, a couple thousand listings in the wrong direction if you're a seller, if the right direction if you're a buyer. But then now let's look at the sales and what's also not helping. So last January, we were off to a really good start in the marketplace with 403 sales in the same time period. Now we're only at 350. So the differential is going the wrong way if you want the market to be good and busy. I guess the question is, what for you means the market is good? And on top of that, I only did that research of 6,110 about 20 minutes ago. We've had 22 new listings come to the marketplace in that amount of time. So in that respect, we're going to see an alarming amount of listings on the market for the next little bit. Now, is that clickbait a little bit to say alarming? Sure. We could easily get up to 8,000 and the market would still relatively be quite healthy. If we cross 10,000 listings at any one point in time, we're going to see a very different marketplace. Now, sellers, that means prices will not be going up. It's just a matter of fact, the prices will not be going up should we keep this type of inventory on the marketplace. And now everybody's saying to me, well, don't worry so much about those listings that are flooding back to the market. Those are last year's. Those are just last year's listings that didn't sell, flood to the market. And that is true. So they're not necessarily new listings coming to the market. A lot of them are just the stuff that didn't sell this, fall in kind of a crappy market. But think about that. We're going to get all last year's junk that didn't sell that was priced too high. And then we're going to get all this spring's new inventory coming to the market, most of which hopefully people are priced well. It's going to be a lot of listings on the marketplace. We should be at about 6,000, 6,500 listings on the market. But that should be at a pace of about 1,000 sales per month, which is more like a spring market. And right now, we're going to be lucky to crack 700. Probably in the spring market, you're actually probably going to hit closer to 12 to to 1,500-1,600 sales. Nothing, probably not 2,000 sales, and maybe a couple of months will do that. But let me tell you, the inventory coming on is not good news for sellers if you're looking to sell. And buyers, my goodness, what have you been waiting for? Like, you're going to wait, and sure, you're going to wait for even more to come on, and then you're still not going to pull the trigger. Buyers from 2015, 2016, 2017, half of 2018, all of 2020, all of 21, and most of 22 would die to be in this marketplace right now. So that's something to consider. Like, yeah, you're never going to be happy with the price you pay. It's always going to feel like too much. I get that. But right now there's choice. There's listings that you can look at. There is some really, really tight inventory in some spots, but I'm going to go over inventory a little bit more broken down for you here so you can get a better understanding of what's going on in each market across the Fraser Valley, or sorry, in each asset class type. In the meantime, if you are in the chat right now, your answers will be coming. If you type stuff in, I will get to them here shortly and later on. But I do want to dive into a whole ton of these kind of numbers that I have for you. Let's get into condos. Condos, everybody, like, condos are hurting right now. They're terrible. It's really, really tough, particularly if you bought like an investor style, really cookie cutter condo in like downtown Wally, Surrey area right now. You're in tough. Currently, there's 1,771 condos on the market, and in the last 30 days, there's only been 96 sales. That is 12 months of supply. So this is out of the 6,110 I was talking about earlier. 12 months of supply. Believe it or not, months of supply, that's actually the best case scenario. However, that kind of isn't really what we're seeing out there, and I'll explain. Townhouses, of the 6,000 and change, 1,133 of those listings are some sort of townhouse or attached row home. Only 86 sales in the last 30 days. That means that's 13 months of supply. That's double a buyer's market. Detached. Now, this is the crazy part. The detached market, this includes houses with acreage, any detached property, single family homes, 2,573 of the active listings on the market right now, which means the extra 633 or so are other types of things, fourplexes or who knows, mobile homes, all sorts of other stuff like that. So out of the detached properties, 92 sales. That number is 27 months of supply. That is insane. And that should mean that detached homes are coming down at record paces, but they're not. Believe it or not, those are actually inverted the other way around. We have a property came on the market this week, flooded with showings, offer in the first 2 days, really, really good offers. Looks like it's going to come together. Maybe it doesn't. Maybe the buyers don't get their financing. Who knows? But our condos that are on the market are getting very few showings. Again, you as a buyer, your time to strike. You might wait for a better time. Sure, I agree. I get it. But it's pretty good out there right now for you buyers. You have choice, and you haven't had that for a long time. Of those 92 sales across the Fraser Valley, 88 of them were over $1 million. Only 4 homes sold detached under $1 million. Crazy. And half of them were kind of over and under the $1.5 million mark. So you end up with about 45 homes under 1.5 million. So that's it. It's really weird to see these numbers out there of like such a slow detached market, so much available, and then go, well, those are actually the properties that are going into multiple offers, or getting lots of offers, getting lots of showings. Obviously, it depends on the lower end. Like anything that's listed between $1 million right now in the Fraser Valley and let's call it, I don't know, 1.4, gangbusters. So something to think about there. Hello, Mother Rat. Nice name. Appreciate you. Trump admitted. Let me get to the chat here. With the Trump administration coming in and potential job losses due to tariffs, do you think we have more price drops to come? If job losses happen, like if indeed next week these tariffs do come in at the same extent of which he says they're coming in, which I'm now starting to believe is a higher chance than normal, we're in bad shape as a country. That is not Donald Trump's fault. that is our leadership's fault in not securing our own energy and not selling our energy to more than one market. Crazy stuff like this, selling our goods to more than one market. So that is our country's downfall. Yes, it will be a bad thing for the overall economy. Whether or not it's bad for the market, time will tell. I talked a little bit about the listings coming back to the market. That is where a lot of them are right now. A lot of listings are coming back to the marketplace. But again, you're going to have all these new kind of folks coming to the market. The trouble that we're having when we're meeting with sellers right now is they're not happy with the recommended prices that we're recommending, a lot of them. So they're not doing anything. And unfortunately, if I'm correct, and if we keep sliding towards more and more and more inventory, they're really not going to be happy with me when we actually list their property, say in April or May, because they're waiting for the spring market. So maybe things come and turn around completely. At this point in time, you need, not that you need inventory to come off the market or sales to pick up. You need to see inventory not come to the market as fast as it is. So there's something to consider. Are you expecting stagflation? I thought we went through that already. I don't even know if stagflation is a thing. I'm not expecting mass inflation, obviously. A lot of that has to, I think we could counteract the tariffs extremely quickly if we just don't charge carbon tax anymore. But I don't know. What do I know about the economy? Probably not nothing. Probably not something. I probably don't know anything about the economy. If you want to ask me about the market, your particular areas, I will show you some things that I think are interesting. I'm going to pop in here and take a look at the overall marketplace. So here's what's going on in the overall market. This is the detached marketplace across the entire Fraser Valley. So obviously we saw the peak. This is going back 3 years. And we've had this seasonal pricing. Seasonal pricing has never been a thing prior. Now we're actually starting to see seasonal prices. But look at this kind of slow, steady kind of decrease, right? It's like coming to the end of a roller coaster, almost quite literally. Like the big drop, the kind of second bump, the third bump. Now we're coming into this nice, slow kind of downward trend. The thing that sellers don't want to know in the detached market is we are seeing a bit of a downward trend. So that being said, if you look at numbers a different way, now I'm a proponent of benchmark price, because what benchmark price does is it tracks the same price for the average home across the area, as opposed to average price, which just calculates what's going on. The bears out there say, well, average price is the only thing that matters. Well, if that's the case, guess what, guys? Prices are going up. Does anybody believe that? No. Likely what's gone on is because interest rates have come down, the people that do have the money to spend on bigger properties are taking action on them. So you've probably had some more higher priced properties sell in order to bring up that average. I do not think that prices went up in December in the detached market. This is much more realistic about what's really going on. Now, this is the entire Fraser Valley marketplace. Now let's take a look at a couple of other things. If I go all property types, that average changes immediately. So that was only detached that spiked up. So that tells me that maybe big acreages sold, some luxury properties sold, and it really dragged up the price. But right now, the average sale price is a pretty constant down, as you're seeing here as well. So now let's break it out into, so that's average. Let's add detached. Okay, so now that you can read this, the detached line is the red one. So we're a nice slow kind of slide down a very gradual hill. The blue line is now all property types combined, detached and attached. It's doing the same thing. You'll see it kind of peaked out around the $1 million mark. Now we're sitting at 965. That is hilarious because I just did that in a video the other day. That is too funny. So you're seeing about a 1% decline month over month continuously. That is hilarious, actually. I didn't even do these numbers, and that was my last video or 2 videos ago. So the townhouse market is the orange. seeing kind of the same thing. Now, generally speaking, like you're going from the spring market last year at 854 down now to 827. On a percentage basis, this is not a big number. But you're cutting $25,000, $30,000 out of your pocket. That's a big number. This is what's going on out there right now. And surprisingly, the apartments are kind of doing not that bad. They kind of peaked out again last year, about $555. Now we're sitting about $20,000 less. But it's kind of this slow, gradual slide. And all property types are doing that. And as I said, detached and the average is going up. So if you're a bear, you missed the market. Sorry. That being said, sales are coming down. We did have a very busy kind of end of the year last year. September was abysmal. Usually the abysmal month is December. September this last year was a rough one. We had a good month, but the market didn't. January is usually kind of the bottom. Active listings. Here's what's going on. So I'm going to back out, and this is why I say this is the worst market than we have seen since the Great Financial Crisis, because active listings on the market bottomed out at, what do we got? 4,600. And then after the Great Financial Crisis, we were at 6,000. Then 5,000. Then 5,000. So we're right around the inventory levels of like 09, 10, 11, 12, 13, which was not a great marketplace. Wasn't a terrible marketplace. Definitely wasn't as bad as kind of the first 6 months of 09. Month supply, obviously steady going up in all categories. And then price per square foot. Now, maybe I should just say this separately without showing you this, because price per square foot to me is something silly. I will get to your questions. Thanks for everybody sort of starting to add some stuff in. I will take a look at them here shortly. Let's talk about price per square foot. My condo investors, if you're buying a resale property, nobody cares about price per square foot. Size of the unit does matter, yes. But if you're calculating your purchase or your sale on price per square foot, that's not what matters. What matters in the resale market, does the buyer fall in love with the property? That's it. There is no price for that. There is no price per square foot for that. It's the overall package. So just because, here's what I've got. I've got a lot of people coming back to me right now saying, I bought this off of a floor plan. I paid this much per square foot. Now I want to get this much per square foot out the other side. Doesn't work that way. You bought from a developer who sold you a floor plan. The person buying your unit now that it's completed is buying the livability of it. They're buying, do they like the size? Do they like the direction? So they're buying a completely different thing. The resale market is different. So just because you bought it price per square foot does not mean you're going to sell for price per square foot. Now, if it's a 700 square foot unit versus a 1,400 square foot unit, obviously that matters. But if it's 712 versus 736, nobody gives a rip, just so you know. Even if it's 850 compared to 925, if it's got the same amount of beds and baths, does it matter at all? I don't think so. All right, let me get back to the chat here. The chat is not very active for all of the people that are here right now. I would love you to give me a thumbs up, subscribe to the channel, jump in the chat. I'd love to see you there. Average, what is the average price of a townhome in Pitt Meadows? Well, hey, I was there. Let's go back. Let's go back and take a peek here. So Pitt Meadows is actually outside of the area. We do a lot of work in Pitt Meadows, but generally speaking, I don't advertise a lot there, so I don't cover it a lot on the channel. So the question is average price. Did I deselect everything there? There we go. So the average price, this is why I hate average price. This makes no sense to anybody. It's just jumping up. It's like $1 million one month, and a couple months later, it's like 660. Doesn't make any sense, right? Am I on Townhouse? I am. What a win. Let's look at the HPI. So the HPI is much more of a steady number. The average right now, as of end of last month, is 813. Peaked out at the peak of the market. Peaked out late, May of 2022 at 919. Bottomed out at 760. Now we're at 813. So kind of only a few folks are kind of out. Everybody else is doing well. But here's the problem I'm coming along with. So let's say, for instance, you did buy in, I don't know, let's say you've been there a long time. Let's say you've been there for 10 years and you bought in 2015 for $339. I go in and I say, hey, your place is worth $819 list and you're going to get within 10 grand of that. And everybody goes, but I don't want to list for $819. I want to list for $919. You're not going to sell. It's pretty simple. Just because you want that money doesn't mean you're going to get it. So that's what those townhouses are doing. I'm super interesting. I always like to go and see how it did compared to the other asset classes in the same area. Unfortunately, you can't always do that with HPI. Can I? I can in Pitt Meadows. Townhouses actually didn't see the rally, believe it or not. Condos and detached in Pitt Meadows saw the rally, but townhouses did not. Not necessarily the best asset class to be in there last year. Not that you could tell that. Thoughts on buying in the Nanaimo area? I wouldn't do it, but I don't want to live in Nanaimo. So if you're investing in the Nanaimo area, I guess. I never invest outside of my area. Nanaimo is nicknamed Surrey by the Sea, so apparently it's just as nice a place as Surrey is. Would I get there? I don't know. Vancouver Island, if I was buying on the island, I would probably go much further north, spend a lot less. Like if I was investing, I would invest in Campbell River. I would not invest in Nanaimo, personally. Planning to move. Should I hold or sell our property in the Lower Mainland? Great question. One, do you want to be a landlord? Right now, your rights as a landlord are dwindling. And unfortunately, as a result of our last election, it's going to continue that way. So, as a result, if you are a landlord and you're okay with being a landlord and you're going to leave, do you want to manage that from somewhere else? Funny that you asked this, because I just put up today on the channel this question here. Assume you were a peak buyer that put down 20% in 2022. Your market value is now 15% lower. You are, for 100%, you are leaving town for a new job somewhere else that's much better. Assume peak prices will not return for many years, 3, 5, 10. Personally, I think it's going to be between 5 and 7 at least, depending on what happens with governments and economies and all that stuff. Which do you do? Do you cut your losses now and just move on? You're probably, let's see, if you do that, you're losing $150K, plus you're probably paying now on $850, $20,000, $25,000 in fees to get out. You're lucky after you pay mortgage penalties and lawyers and everything to lick your wounds, walk away with 10% of your 20% down payment, which is $20,000. Or do you keep tossing $1,000 to $2,000 a month? So it's $1,000 right now if you locked in at 2.2% at the peak, or it's closer to $2,000 a month negative after you collect your rent, and you still have to feed this thing. I know which one I would do. I'm with the majority on this. 74% of people, I would sell it and cut my losses. A lot of people are tossing good money after bad right now. And that's just because they bought at the peak. So I have a video coming out on that soon. Or did I put it out already? I can't remember. So, should you sell your property in the Lower Mainland? I guess the question is, do you want to maintain it, and can you? People are really shocked right now at how low rents are compared to their carrying costs, and they don't realize how negative they are each month. So that's a tough one. Let me know what you would do right now. If you're in the chats right now, do you I don't want to say toss away, because you've already lost it in some respects. Do you throw away 180 grand right now for sure? Or do you keep tossing 1,000? Let's meet it in the middle. $1,500 a month, add it for the next 5 years and rent it out. Who knows what your tenant do? Put it in the chat. I'd love to see your answers. We are We are in mess. Yes, we are. Market is way too slow. Market is not way too slow. The market is not way too slow. The market is quite healthy at the moment. You are used to craziness. It should not be easy to sell your home. Simple as that. It shouldn't be easy. You shouldn't be able to hire just anybody that got their real estate license 2 days ago, doesn't know how to negotiate a deal, doesn't know how to market a property, and be able to get $100,000 over your asking price in 2 days. That should not be the market. It should be hard to sell your property. The market is not bad right now. You want a bad market? Let's wait until inventory doubles from here. 12,000 listings on the market? People are going to change their tune and they're going to start hiring really good agents of which they know, like at that point, it's just, thank goodness I got it sold, right? Big difference. Big difference. Your wife is with the majority. She wants to sell. So RY in the comments, let me know if your place is negative from where you purchased it or not. Because I would love to know if you are in that situation or if you're in a better situation. Like for sure, if you have a lot of equity and you're moving, my thought is if you're going to move, go buy your principal residence in the new place that you're going to move to, whether or not that's different province, different town, whatever. And then if you want a foothold back in the market, you buy a lower priced asset. Say, for instance, it's you, your wife, and a child. You buy a 2-bedroom condo here if you're coming from, say, a detached home, and then you keep a foothold in the market, and it's going to cash flow in a better situation. Yeah, you're still in the green. See? RY, you got it in 2019. You're still doing good. My thought is go enjoy your new wonderful life somewhere else. If it's your principal residence, sell it. Book a call with me if it's in Surrey or the Fraser Valley. And I think you'll be kind of happier later on. Unless, of course, you want to be a long-term landlord. Think about that as well. 1,500 might be my limit, and that depends on where I bought. Yeah, like $1,500 is a lot. So what you have to do if you're going to look at $1,500 a month negative cash flow is you got to make sure that you're not paying into the interest. If you are paying into the interest, cut your losses now. Right? Like if your tenant isn't paying at least $100, let's call it, of your principal per month, you're not making any money. Tough call. Never good to invest in Canada. That's not true. It's been great for me to invest in Canada. So obviously NH has been a very negative Nelly over here in the comments. Let's talk mortgage rates now. Please enter your comments in. I will respond to what's going on in the chat. Let's talk mortgage rates. Mortgage rates right now that I'm seeing out there are pretty interesting for a lot of folks. So the question is always, should I go variable? Should I go fixed? The answer is, what do you want to do? Is it's up to you. But right now I'm seeing variable rates. Let's call it high fours to about 5.5%. I think in really high, like HELOC type variable rates, it's like 6%, just a hair under 6%. So people are going, well, interest rates are going to keep coming down, so I'm going to take that. I'm in the process of renewing my mortgage right now. Will be within the next 2-3 months anyway. And I was looking very heavily at that variable rate. But let's say, like, for instance, my bank's going to offer me a 5.5% variable rate right now, and they're going to offer me a 4.2, 4.3, 4.4 fixed rate for 5 years. You need interest rates to come down a full another percentage next year and then hold that or more in order to make up for where you could already be at the 5-year fixed rate. The real question is, getting back to the first comment that was here, talking about, possible tariffs and things coming in. If we get tariffs, there's an argument that strikes inflation, interest rates go back up. So right now, I'm back on my regular fixed train. Like, if you can get below 4.5, even 4.69 right now, anything below that, lock that in and be happy. Because a year ago, it was up 1% from there. And a year and a half ago, it was up another 0.5% from there. It was 6.39% in September of 2023. So these people renewing right now at 4.2, 4.3, 4.4, don't worry, be happy, man. Lock that thing in. Be happy you didn't renew a year and a half ago. You haven't paid any big penalties on your mortgage because you do have to come down that far. Now the question is, where do you think they're going to be? Personally, I do think interest rates are going to come down another full percent, personally. We'll see what happens as a result of, I mean, this is not knowing if tariffs are coming in, but I do think our economy is getting tough enough that that's going to happen. So yeah, you could get a variable rate and your variable rate might be around 4, but that's the gamble you're taking. The other side of that, though, is I'm not planning to move in the next 2 to 3 years. So remember, the downside to a fixed rate mortgage is when you're locking in, this big penalty comes if you're trying to move in 2 or 3 years. So that's a big, big mistake. Probably the biggest mistake that people make is locking into a 5-year, is they think they're going to be there for another 5 years. And my clients, particularly move up people, they usually last about 4 years in a property and then they're ready to move on. Downside is right now the 4-year fixed rates are garbage. So don't take them. It's worth the penalty. Something to consider there. So let me know if you think my strategy right now of locking in, let's say it's 4.5%, 4.5%. Do you think, write it in the comments, I'll read them out. Do you think that's a smart move? Or do you think I should take the 5.39 or maybe 5.29 and hope to hell like the rates come down over the next year? Super interested to see what you have to say. What was the historical townhouse prices in Surrey 2019 versus March 21? March 22 is actually going to be the high point, but I can actually pull that up for you here. Let me hop you back into my screen. Thank you for the people from the Fraser Valley Real Estate Board. So this is Surrey. Now, Surrey is done a bunch of different ways. The way I like to look at it, Surrey combined. So this is the actual city of Surrey itself, not North Surrey, not South Surrey, not including White Rock, all those sort of things. Now we're going to look at only townhouses. So you said Surrey in 2019. 2019 was a tough year. They were actually, look at this, prices were going down at that time. So let's take the peak from 2019. Average Surrey townhouse was $583. Then at the peak of the market, well, you asked actually the year before. I don't know if you meant to ask that. 21, they were $687, and then they gained $300,000 worth of value, if you want to call it that, value. Devaluation of currency is what I call it. At that point in time to $977. Now we're at $853. So if you go from then, the peak of the market in 19 at 583 to now 853, you're still doing pretty good, even after all this craziness. So let me know if that's what you were looking for. RY says, thanks. Lisa Roy, or Wah, depending on if you're French or not, also says thanks. Felipe says, what do you think about prices at SFU? I don't know anything about SFU. I don't sell there. Do you think homes in 10-year period at this could devaluate? Over a 10-year period, I think we're going to, let's put it this way. So far, historically, as long as real estate numbers have been tracked in my marketplace, the longest period of time that it has taken a property value to double is 13 years. The longest period. And that's hard to think about because in your brain, you're going, well, the average house is $1.5 million right now. There's no way that in 38, that they're going to be worth $3 million. If I had to bet, they are. I'm not saying it's right. I'm just saying that's how it works. So something to consider there. If you're going to hold a property for 10 years, I think you're going to do fantastic no matter what. Worst case scenario, unless you're in Edmonton, because Edmonton sucks. Sorry if you're in Edmonton. I mean, like, just sorry if you're in Edmonton. Generally speaking, you're going to do fine. And you're going to have an asset paid off, ideally, or at least paid down quite a bit. If you think rates will continue to drop, why not just lock in for 2 years? 2 year is not 4.49, right now. The 3-year is 4.49. The 2-year was like 6%, and that I was offered, and the 1-year was like 7%. Like, they were crazy. So they're steering everybody to a 3, and then the 4 went back up to 4.79, and then I just got offered 4.44 on a 5-year. So I'm locking in for the 5-year. Because, I mean, who knows where rates are going to be? I think anything under 5% is free money. You should be happy with what you got. That's what I think, like, just traditionally. That being said, I think this will be, if I do lock in at that rate, which won't happen for a while, this will be the second highest mortgage I think I've had in mind. So now you can comment all about, whoa, for the last 40 years, interest rates have been coming down. Yeah, it's true. And if you think they're going to try and get them back up, I think you're wrong. Monetary policy will say otherwise, particularly if we end up with another liberal government and Carney running things, because he loves low interest rates. I renewed my fixed rate in 2023 at an outrageous 6.79% for 2 years. Thankfully, you only did it for 2 years. If you took the 3-year at that time, it would have been 6.39 probably. Or you're at a really shady lender. Not shady lender. You've got outlying circumstances of why. Am I still in this stupid picture? I am. Here we go. You got outlying circumstances of why you're at a higher rate. But there's lots of people that locked in a 5-year at 6.39 or even upwards of 5. And now in the last 6 months, I put out a video September, October maybe, that was like, now is your time. Cancel right now. It's going to cost you a $10,000, $5,000 penalty or something, and you're going to get your payment way lower. The people that I know that have done that have lowered their amortization by like 10 plus years, and they've lowered their payment by $150 a month. So if you're only till this, what does that make it? Sorry, I'm just looking for it here. I lost it. Does that make it this September or this year sometime at 6.79%? I think you should hopefully do better off pretty quick. You may even want to look at a blend and extend at a 5-year to bring it down, but probably not. It's worth a phone call. I can hook you up with a broker if you need one. Sorry for the dead air, folks. I was educated in Surrey. It takes me a while to read. 3-year fixed at 4.29 or variable at prime minus 0.8. Prime minus 0.8 is really good. 4.65. So that means if you get another quarter point, so you need 2 quarter point decreases to be. If I had 4.65, I'd be pretty tempted. I didn't get that offer. My bank didn't carry that type of a product because I have a more flexible line type mortgage. So 4.65, prime minus 0.8. I think you're in pretty good shape. I'd be super tempted. Depends how much equity you have in the property too, how long you've been a property owner, because if you're younger and less established, or if you're in an industry where you think might get smashed here in the next little bit, you might want to take a sure thing instead of a little bit of a gamble. Make sure to lock in. I agree with you. It's not worth the risk. I also agree with you. We live in turbulent times. I do enjoy my sleeps at night as well. That is the thing that gets lost, right? There's all these people, particularly probably you people watching out there right now. You're really like thinking about the market, and you're thinking about like, how to game it. A lot of people aren't thinking about that. So you're probably more risk adverse, or sorry, the opposite of risk adverse. You're probably a little riskier, and you're like, okay, you're educated, you understand. Most people, my suggestion, almost everyone out there that's not watching me at 1:00 on a Friday afternoon, lock in, set it, forget it, get on with your life. That's most people. Those people also don't watch my channel, so they're not going to get this advice. Think about that. Thanks, man. Best realtor in the Lower Mainland. I don't know about that, unless you're talking about somebody else, but I like to think I'm pretty good. 3-year fixed rate at 4.49. It's a good rate. Take it. I'm not taking it. I'm taking the 5-year at 4.44. RBC and no other choice in December 2023. So now, let me know what you think about in the comments that the stress test has been removed from refinances changing institutions. That's going to put a competitive edge on actually refining, because what some banks were doing, and I know one of the red banks, for instance, was doing this for sure. If they knew you couldn't switch, they were giving you a high rate. Like if they knew you're at 639, you have to qualify at 839, and you can't qualify for that, guess what? You're not getting 839. Maybe that's how the other commenter there got the 679 or whatever at one point. It was one of the red banks. There's only two. Is there more? Does National Bank count as a red bank? It wasn't National Bank. I bought in 21, but I wanted to compare before and when I actually bought. Yeah, well, before, as they say in real estate, the best time to buy real estate is 20 years ago. The second best time today. Get in there, man. It's not a short-term thing. That's probably the biggest upset that I have here is everybody's trying to, stocks and all this different stuff and Bitcoin, and that's the world we live in. No, man. Buy real estate, sit, wait. Do I have it here? Oh, no, this is one. So I give out these mugs, or I used to give out these mugs. I had one that said, don't wait to buy land and wait. This one says, buy land, they're not making it anymore. Quote by Mark Twain. Karrasch Real Properties mug. I should probably get some more of these made and hand them out on the channel here one time. What's the penalty to break a 3 to 4 months? What's the penalty to break for 3 or 4 months? See if I can try and get that right in my head. So if you're within 3 months, the penalty is much less or sometimes even waived. But if you're outside of 3 months, the calculation is interest rate differential, which is a very crazy number that you're not going to calculate. You have to ask your bank, or 3 months interest, whichever is larger. So a lot of people with the interest rate differential and the posted rates where they were actually getting out at just 3 months interest in a fixed rate product. And that's why I said to do it. Like it was like the same as a variable. It was the same penalty. Do it, get the lower rate, marry the house, date the rate. Question, what's average real estate agent rate? Well, I'm a 10 out of 10, so I think what you're asking about is commissions there. Depends what province you're in. So the CBC, if you find them to be a reliable news source or not, depends. They put out an article about a year and a half ago that I think the average in Ontario was 5%. They kind of vary. As you get closer to the west, and particularly in BC, we have a tiered system here. On my channel, on this channel, I have a very detailed video about how real estate fees got to where they are. So if you want to really dive deep on it, there's a long video about that. But generally here, the CBC has reported that the average agent in BC will charge, now this is for the agent and the buyer's agent, so this is inclusive fees, 7% on the first 100,000 and 3% on the balance thereafter. So we are, as far as I know, one of the cheapest, if not the cheapest, markets in the entire world for fees. We're about 3% plus $4,000. That's where the market is. I will say I don't charge that. I have different marketing packages. I actually have many different models. Not many. I have a few different models, depending on what my clients want. Something I think the industry should do. I will let you know, as inside baseball, when I offer a different fee to somebody, it could be less, it could be more, it could be exactly the same as somebody else. Some people don't pick me because they want the standard fee. If your agent tells you standard fee, fire them immediately because they are not compliant with the law. There is no such thing as a standard fee. Also, don't fire them immediately because I'll get in trouble if you fire them. But what I'm saying is there is no standard fee. The most common that you will see out there is 7 and 3. My most common that I charge, I'm about 50-50. Sometimes I charge more than that. Sometimes I charge less than that. And I do have a much lower rate, of which most people don't go for, because obviously you got to scale out some of the costs and the hard stuff. So, what's going on with recreational property in BC? Very expensive. So I just sold a rec property on Harrison. Much more expensive than it used to be. A lot more expensive. So I appreciate the question, Kent. Nice to see you in the chat. It's really tough because the stuff that even like the boat access stuff is extremely expensive. The problem that BC has is if you want to be on like a lake, like you would think cottage, like in the rest of the country, we don't have that much of them here. So it's really tough to even find a property. Then you got to finance it. Financing it is the hardest part. Insuring it is almost as hard. Most of those people are cash buyers. So something to consider. I wish we could have more rec property. And now the BC government doesn't even want you to have an empty, vacant rec cabin that you could go to, because there's like, is it Lake Saanich? Lake Shawnigan? Maybe Lake Shawnigan. They're starting to put like, is it Shawnigan Lake? It's probably Shawnigan Lake. They're starting to put vacancy on those type of properties. So people would have a lake house, and if you're not there 6 months out of the year, BC government's going to tax you for it. Speaking of BC government taxes, the flipping tax is in. The other day, I was shown a picture of a property that unfortunately the owner obviously has some mental health issues. The property is absolutely in terrible shape. There's no chance we're going to sell it to an end user because the property is in that bad of a shape. Think like, hoarder TV show style. And now there is no buyers that want to buy it to flip. So as a result, that property is going to become decrepit unless we can magically get a first-time buyer that wants to put lots and lots and lots and lots of money in somehow and live there for many years, or at least 2+ years. So the flipping tax is going to make Vancouver and BC, and I guess all of BC, have way more worse properties. Thank you very much, NDP government. And take all the incentive out of making properties better for people to live in, and heaven forbid you make a little money along the way. So BC flipping tax is in. If you're unaware about what the flipping tax is, if you sell a property within the first 12 months of owning it, and this counts also for contracts for pre-sale, if you make a profit, not only does the federal government charge you income tax on it now, the BC government charges you 20% of whatever you make of your lift. And my understanding is it's purchase price to sale price. So I don't know if your renovations or anything can be deducted. Apparently there's a whole bunch of exemptions, but they don't give you the exemption until after you pay the tax and then apply for it back. Vote conservative next time, folks. Okay, let's get back here. South Delta, thoughts for 3-story. Not much inventory. 3-story in South Delta. You're not. So in 2012, North Delta opened up to 3-story building. The reason a lot of Delta doesn't have 3-story building is because the 3rd story or the in-ground story. Let me try and re-say this. The bottom story in BC is generally in-ground as a basement, 50% in-ground or more. The reason we don't have a lot of those is a lot of the services in Delta, some of the services in Surrey and then South Delta, the like sewer pipe going out is not that low. And only recently has Delta decided, I think it was 2012 in North Delta, I don't know about South Delta, same city, mind you, or corporation. It's not a city, it's a corporation. They would start to allow sewage pumps. So basically you got a big holding tank in your basement and you would actually have to pump it up and out. So those were always a nightmare because if they failed, guess what your basement's full of? So that being said, as soon as they opened up to 3-story and they let you put a pump in, in North Delta, all of the builders that were building in Newton, all these kind of monster houses, traditional Surrey kind of houses, they all went, wait, what's on the other side of Scott Road? And they all changed. And 2012 is the year that Delta changed forever, because North Delta was a quiet little place, undervalued. And as soon as they opened up to bigger building, things went crazy. So there's your history lesson. South Delta, I love it. I think if you're going to go there, you're probably not building a 3-story home or looking for a 3-story home. And Delta is not so good, or at least historically hasn't been, on suites as well. So something there to consider. If you're going there, you're actually going there to get away from 3-story building a lot of the time. Ladner, Tsawwassen compared to Richmond. I mean, I would rather be in Tsawwassen compared to Richmond personally. I'm terrified of Richmond. I'm terrified of Ladner. They're under sea level. Just a personal thing. At least Tsawwassen's up the hill a little bit. With an influx of listings, thank you for joining. That's what I was talking about earlier. With an influx of listings, what are your thoughts on the crash in prices? I do not think prices will crash. I think we're going to get a crazy amount of listings. There are some hurting sellers out there, but not that many. Why won't prices crash? Because sellers can hold out. Most sellers are never, even if they just won't move. They'll hold on. There's a few people that'll desperate sell, but one of the things I hate to hear from people when I go into a listing appointment is, oh, that guy down the street, he had to sell. Oh, okay, I don't have to sell. Yeah, but you are moving to Kelowna for your new job. Well, yeah. So, you know what? That guy was probably in a similar situation. You don't have to sell. You want to sell. This is market value. This is what you're going to take. If you want 10% more than market value, 20% more than market value, just don't go on the market. I think we're going to see this kind of steady, slow decline outside of tariffs. Tariffs? Who knows? If tariffs come in and immediately we get, hundreds of thousands of layoffs, we're going to have a different problem. But then the problem's not the real estate market. The problem is the overall economy, which, again, going back to my rant earlier, is the problem of the government not diversifying our economy enough by selling energy. But let me get off my soapbox and get back to the comments. Any predictions on the coming BOC rate decision? Thank goodness it's after the tariffs. So if the tariffs come in, I think they might hold a little more. Probably a quarter point is what I'm guessing. And it is not your savior. The market adjusting with low interest rates is going to happen 6 months after the last decrease. That's where I feel like you're going to be. So again, every seller I'm meeting with, well, rates are going to come down again, so that's going to bring buyers in. No, it's not. Rates coming down is buyer uncertainty. It's bad economy. So it's not going to help things. It will help things eventually, but not yet. So if you think that you're going to wait for January, whatever is it, 28, 29, something like that, Wednesday, in a couple of Wednesdays from now, and that quarter point, if the last 175 basis points haven't got you a higher price, why would the next quarter? Doesn't make any sense. So at this point in time, yeah, I think we'll get one. I don't think it will have that much of an effect. If anything, it'll save us a little bit, but it'll just save us from prices plummeting as fast as maybe they could. So that's my thought. I'm probably wrong. Do you see those tiers changing in BC? First tier on the first 100. Do I see the tiered system in BC changing? I don't. The reason I don't see the tiered system changing is it's just so entrenched. It's just kind of customary here. Just like the style of building is customary here. You could build a different house, but you're probably not going to just because nobody else does. So I don't see it going away. What I will tell you is it's going up. More agents are charging more in BC compared to what they used to. Because when I got in the business, the average was like 6% or 7% on the first 100,000 and 2.5 or 2.5 on the balance. Now, because of customer expectation of what we need to do in order to get the property sold, so paying for floor plans, proper photography, staging, virtual staging, all the different steps that we do, it's much more expensive to be in the business now than it was before, even with the price increase. And so as a result, I know a lot of top agents, and particularly even a lot of the agents that have like they're, what we call farmers in the industry. They're like bus bench guys and like lots of mailers and all that sort of thing. Those guys need to fund that somehow, and they're increasing the rates. And I'm seeing much, much higher rates out there from a lot of folks. So I won't be shocked if the average in the next 3 or 4 years is 7 and 3.5, and as opposed to 7 and 3 now, when I got in the business 7, 2.5. That's the way it is. And let me tell you, they are not, those guys that are increasing in that manner, they are not splitting that then in an equal proportion to the buyer's agent. So buyer's agents in BC get paid even a lower amount, like, because it's the way it's split, 46% generally of the old way. Now it's swaying even further. So not standard, but what I see most commonly. I think the pressure is going upwards. Enter any last questions you have. I'm going to try and get to some here. I got to wrap up in the next few minutes. So if you have anything, I will try and grind through these here. And hopefully my long live stream helps the YouTube algorithm. So click the like button, get this out. Thanks for watching. Who else can we get to here before we go? The Canadian real estate show is way better than this show. Yeah, I mean, not really. Canadian real estate show is okay. 50% of their hosts are good and the other 50% stink. Love you guys. I bought a home in Surrey and I've lost $400K in value. I bought a home I wouldn't buy there. That doesn't make any sense. I bought a home in Surrey and I've lost $400K in value. I wouldn't buy there. So you're saying because the market was up when you bought and you lost value that nobody else should ever buy here. It's a ridiculous statement. Just as ridiculous as your Canadian real estate show is a better show than this one. So I guess you're saying crazy things. Islam is canceled. Are you serious? I didn't even know that. Is it done? That's UFC talk, if anybody's following there. Now I got to look this up. Now I got to hang up quicker. I hope it's not canceled. James is here from Kelowna. Great channel. If you guys get a chance, if you want good information up in Kelowna, check out James's channel. James, I hope I got that right. I hope you're in Kelowna. I'm pretty sure you're in Kelowna. All right. Since there is no more further questions, I'm going to wrap up here. Thank you so much for watching. Click the like button, subscribe to the channel, and be careful out there because the market is headed downwards, at least here in my market of Surrey and the Fraser Valley, and get the word out. Like, for those people that want to sell, they should start selling very quickly, because in the event that they want to wait to try and get a better price 3, 4, 5, 6 months from now, I don't believe they